What's up guys, welcome back to the channel. My name is Bruce Wang. In today's video I'm going to go over my portfolio and exactly what I'm doing during this volatile time. Today I'm not down that much, but over the past weeks, over the past months, my portfolio hasn't been doing that well. So first things first, I'm just going to go over the Robinhood portfolio really quickly, and secondly we'll jump into the M1 Finance portfolio and I can actually show you firsthand what I'm doing to soften the volatility of my portfolio and the stock market. So let's jump right into it. This is my Robinhood account straight off of the website. My portfolio is down again, another $50 today. Total portfolio value is $4,341. Over the week, doing really bad, down almost 5%, $200. On the month, even worse, I'm down $400, about 8% on the month. On the 3-month chart, a lot of my profits has disappeared and I'm down $17. But overall on the year, I'm still doing pretty good. I'm up around $400. So this is what my portfolio looks like. And I kind of just want to show you where I'm getting most of my profits from and where I'm losing a lot of my profits as well. So the highest total return I have so far is from capital gains from Apple, Coca-Cola, and AT&T, and those are really helping out my portfolio. And down on the bottom, my biggest loss here is AGNC Investments, Prospect Capital, Nike. The number one reason why I believe my portfolio is down so much over the past few months is because of Tesla. I invested in Tesla around $250, and this is where I thought it was a good time to jump into Tesla, but obviously it was not a good time. And I rode the price down until it was around $200. And when Tesla hit $200, the Morningstar report, which is something that I'll pull up right now, during the time that Tesla was seeing a lot of volatility, the Morningstar report came out that the new fair value for Tesla would be around $171. So I took the advice of Morningstar and I decided to sell my Tesla stock because I did not want to see the value of my Tesla stocks go down any further. And if I do decide to buy back in, I would buy back in under that fair value mark or around that fair value mark. And the second reason why I think that my portfolio is down so much over the last few months is because of AGNC Investments. As you can see at the total return, I am down $132. And that is probably one of my biggest losses over my entire portfolio, even bigger than that Tesla loss actually. And the thing I'm doing differently than Tesla, I'm deciding to keep this REIT because it is paying me really good dividends over the months. And I'm actually considering buying more because right now AGNC Investments is sitting at $16.51. I have 100 shares. I'm considering to buy more of this stock and dollar cost averaging my way down. I think right now is a good time for me to buy this stock again, and it's still paying me really good dividends. So when it comes to the crazy volatility that I'm seeing in my portfolio, I am actually not seeing that much volatility when it comes to the S&P 500. So this is the Vanguard Sp 500 ETF. This is one of the biggest index funds in the world. And if we look on the day, it's going sideways today. On the week is down 1.6%, which is a lot better than my portfolio. On the month is down about 5%, still doing better than my portfolio. And if we look on the 3-month chart, is doing so much better than my portfolio, is only down 1% for the last 3 months. This is why I think that stock picking is so risky. I'm invested in the S&P 500 in my Roth IRA, and I have a lot more money in my Roth IRA than with my Robinhood account. If I had to do it all over again and I had to pick between penny trading and investing in index funds, the S&P 500, all day I would go with the S&P 500 10 out of 10 times. 10 out of 10 times. So moving on to the M1 Finance account, this is the Wang Gang portfolio, and I am the value of my portfolio is $778. I'm down about 18%, which is 5% on the all-time chart here. So the main thing that I'm doing right now with my M1 Finance portfolio, which I will also be doing it with my Robinhood portfolio, is I'll be investing in bonds. So what I did was I removed these two slices of my pie. I removed the Small Dogs of the Dow 2019 and the Lazy 3 Fund portfolio. when it comes to my portfolio on M1 Finance. If you guys want to find that, you guys can go into the links down below. Everything will be in the links down below if you want to find all the useful information. But I do share my pie down there, and you can go check it out as well. And it will, I think it updates at least once a day or something like that. It doesn't update automatically, so you guys might not see some of this changes until tomorrow. So I had a friend come look at my entire portfolio, and I just asked him for some suggestions. He actually is considering starting his own YouTube channel because he's pretty knowledgeable when it comes to the stock market, and I always bounce a lot of ideas off him. And I told him to take a look at my portfolio and what he thought about it, and he told me, wow, this portfolio is very diverse. And I thought it was pretty funny because that's just the type of person I am. I want to be diversified. I've always, I do a lot of research, and everything tells me to be diversified. So that's what I decided to do. So when I invested in this lazy 3 fund portfolio, this is already diversified as it is. So it's really redundant for me to have this and have all of my diverse sectors in the same portfolio. So what I decided to do was remove this and invest the rest into bonds. And I want to show you the bonds that I'm invested in now. So according to my research on Financial Independence subreddit, they said that the younger you are, the less invested in bonds that you should be. And I probably just forgot about my age. I'm actually 30 years old, and I think that I should have some investments allocated to bonds. So that's what I'm doing. I'm investing about 10% into bonds. Bonds are a lot safer than stocks, and I think that the older I get, the more I should be invested into bonds because, times like this, you can really see that stocks are just so volatile. And what's even better is that I'm investing in bond ETFs. So the bond ETF that I'm invested in is Vanguard Total Bond Market. I'm also invested in this in my Roth IRA. But if we take a look here, you can see that these are somewhat similar to monthly dividend stocks because they do pay dividends every single month as well. And this provides you really good cash flow, especially if you're heavily invested in bonds. If you look here at the holdings, there are 17,322 bonds. So this is very, very diversified with bonds. And if you're investing in this index fund, if a few of these bonds default, it's not gonna play that big of a role when it comes to your entire portfolio as if you just invest in one bond and that one bond defaults. I think this is a step in the right direction when it comes to this portfolio. This will help soften the blow of the volatility in the coming months. I think that the stock market is going to be very volatile. And the other bond ETF that I'm invested in is Ishares high yield corporate bonds. Some of the reasons why I'm investing in this bond ETF is that assets under management is very large, 15 billion, holdings 976, very diversified, and also the dividend yield is very respectable, about 5% dividend yield, and I allocated around 20% to this. This bond ETF is probably the safest thing in my portfolio right now, especially in this time of volatility. I feel a lot more confident investing 10% of my portfolio in bonds now. And this brings my dividend yield to 4.178%. So if you also want to take a look at bond ETFs, all you have to do is go into the research bar here. And instead of going into stocks, you want to go into funds. And down in the left corner, you look into these category sections and you will just select the bonds. There's about 500 bonds you can choose from. There's a great selection of bonds here. And just remember that bonds are a lot safer than picking individual stocks. If you're not liking the volatility in your portfolio, you might consider investing in some bonds to help smoothen out that ride. That's the one thing I like about M1 Finance. It is very easy to tweak your portfolio in its entirety, and you don't have to sell off that much of anything. These two slices are probably around 10% of my portfolio, I believe, and I just moved that all into just bond ETFs, and that's really helped me a lot. If I compare this to my Robinhood portfolio, I would probably have to do a lot of moving around and a lot of adjusting. So that's why this portfolio on Robinhood doesn't change that much. All I really do is just collect the dividends on this portfolio. If you still want more insight about M1 Finance or Robinhood, go check out my other videos here. I'll link them right here. I'm pointing to them right there. Go check those out. Don't forget to like and subscribe. Hit that notification. Love you 3000. Bye.